Well, hello and welcome to Jazz After Dark, everybody. How you doing out there? Just getting situated here tonight. Still enjoying the Chattanooga whiskey, by the way. I had a few of you email mention that you did like that. And you've had it in the past, not that you had it because of me, I should say. And I'm glad you enjoy it. Not bad, it's not bad. It's not really spicy enough for me, I like a good spice with a mix of fruits, and it just seems a little immature, if I could sound fancy for a moment. Well, if you know us here at Jazz, you know we are not fancy, and we also can be immature at times. Just your average people that happen to have a focus on financial planning. We happen to be good at financial advising and wealth management, and we do it for everybody. We don't require that you're rich. And with that respect, we also will not wear a suit and tie. So I'd like to show off a little of those skills tonight because I think there's really something interesting happening in the market. And we don't have to spend a lot of time on this, but I want to expand on it because I believe you're about to see something happen. And we're going to do it from a perspective of, follow the money. We're not going to have an opinion here. We'll just kind of show you what's happening. First thing I want you to notice is something I've shared on our Closing Beat show, a quick little mock-up here. What I did is I said, okay, let's plot the S&P, and then let's build a portfolio that's equal weighted of each one of these 7 stocks. And then let's build another portfolio of all the other S&P stocks minus those. So in other words, we've got 7 stocks and we have the rest of the S&P, and we're plotting the 2 portfolios against the current S&P. Well, if you just invested in the S&P, you're up about 11%. If you had invested in only the 7 stocks that are lifting the market at the moment, you'd be up 53%. Nobody would have done this, but you know what I mean? It's fun to look back. If you were to say that the S&P is actually comprised of only 493 companies, which is a respectable and diverse amount, you'd actually have no gain at the moment. 0 gain. In other words, it's a fun way to show you that those 7 stocks, large cap stocks, are doing all the heavy lifting. That's a problem. And if you go back far enough with me, you know that the last time this happened, I remember pointing out the exact same thing and going, this is not sustainable. It was not at that time. And by the way, I should point out, this is nothing unique. So right now, what large cap stocks are doing the heavy lifting? Tech stocks. Well, go back through history, you'll find that steel companies used to do the trick there. Transportation companies were in the lead for a while. There was a while where the banking sector was the leading sector. So as bank stocks, so went the market. This is just an evolution of how the market behaves. And in particular, I should say an evolution of how the S&P is weighted. They are not going to change that weighting while things are going really well for them, right? So understandable. Now, let's get to the fun stuff. I want you to picture for a moment that you came to us and you said, Jazz Wealth, I'd like you to manage my IRA, 401k, whatever it is. And we said, great, thank you. We do these videos as marketing, and we hope you'll check us out at jazzwealth.com. And of course, we'll work with anybody. So let's pretend for a moment, just make it real simple. You said, Dustin, manage my 401k. I only have one criteria for you though, Dustin and the fellow Jazz members here. I asked that you have a large cap mutual fund, a mid cap mutual fund, small cap, and international. And I ask that you invest, I'm going to pretend there's $400,000. I ask that you invest the $400,000 evenly. So I want 100 in this, 100 in this, 100 in this. First of all, if that's what you wanted, I would tell you we're not a good fit for you because we're not doing any real work for you, and that's not fair to you. But if that's what you wanted, let's say we're desperate. We say, okay, we'll take you on as a client. You started on January 1st of this year. Keep playing this imaginary game with me. Now, what I did here is I tried to be diverse and pick a few different names here. I went ahead and picked you a large cap growth fund. I literally just typed in large cap growth and picked the first one. This is not a recommendation. I did pick you a mid cap fund and picked a different brand just so you'd be happy. I threw a Vanguard in there too for cost. I put Fidelity International Fund in there because I actually couldn't find any international index funds, which is what I was looking for. That was the first one that popped up, and you'll see the point I'm making here in a second. So you start off with us at the beginning of the year and you go, well, hot damn, this is going really well. However, Dustin, I look at my portfolio and I told you that I wanted 25% in each fund. And I just happen to notice that after spending some time here with you, you don't have it. You have, you have an extra percent here and here, but unfortunately you've got too much of my money here. So what we're doing is we're saying you started with 100,000 in each fund. That's 25%. It's perfect. But because of the movement of the large cap fund, you now have 118,000. Because of the movement of the international fund, that's the second best performing area in the world right now. International fund, oh, you got 110. And small and mid cap are doing great. We're happy with the returns, but 104, 103. So what do we got here? 118, 38, 28, sorry. $436,000. I'm going to say $435,000 just because I can't do the math fast enough. Okay? So now we're sitting at a position where, and I'm going to do it here just to make sure I get this right. If we pretend that's $435,000, we are coming up to the end of the month, or we will be. And that means we need to have $108,750 in each fund, right? Because you just caught me. I've got too much money in this fund. I wanted it to be 25% in each one. So what am I going to have to do? I'm going to have to sell some of this fund, and I'm going to have to sell a very tiny bit of this fund and put that money into these two funds. You see what I'm saying? I need to now make it so that you're happy and put $108,000 here, which means $10,000 has to come out. I need 108 here, which means 2,000 has to come out. And then obviously I need to take that money and put it into these two to bring them up to 108,750. Catch my drift? So far you probably haven't learned anything, right? We've just created a scenario. Now I want you to multiply this by literally millions of people. See, in your 401k, you have the option to rebalance. And if you don't do it, usually someone or a system will do it for you. What's happened so far this year is the large cap mutual funds have taken off so much, I can't stretch anymore, that when it comes to rebalancing, what's going to happen? Those funds have to get sold. We need to bring the positions back to the weightings that you shot for. Now, you may not have said 25% in each one. Maybe something fits you better. The point being, you started with 25% in one fund, and thanks to God, it blasted off. Now you have 33% in that fund. Needs to be moved. We need to rebalance, bring it all back to 25%. And so the only way to do that in this unique scenario is to sell the large cap fund. Times that by millions of people, and what do you have? You have a recipe for a lot of selling pressure, not because of fear, not because of panic or anything that happens in the world, or maybe those stocks are no good anymore. Nope, none of that. It's because people need to rebalance. And if you don't rebalance, the system will do it for you. When do they do these rebalances? Sometimes at the end of the month, but usually at the end of the quarter. So we now have a large cap mutual fund times all of them. Like there's literally, how many are there in the world? 1,774, according to my scan here. Let's say they each have just a couple hundred million, which is not the case. They have a lot more. What do we have? We have dollars that are going to come out, and where are they going to go? To the underperformers. Not because we believe in them and they're supposed to get better, but because we just simply need to rebalance. You told your 401k, your 403b, your 457, you told them all to rebalance for you. So why would you buy large cap funds now? And if you say, well, I'm not a mutual fund guy, I do ETFs. It's the same thing. Oh, I'm not an ETF guy. I pick individual stocks. Individual stocks make up the mutual funds. So, for example, in that JP Morgan Large Cap Growth Fund, that's your NVIDIA, that's Microsoft. So when that fund says we need to sell positions, they're selling those positions. So those stocks that are having a great run right now, money's going to come out of them and go to small and mid cap stocks, ETFs and mutual funds, right? Again, not because small caps are the place to be. So if you're out there and you're going, wow, look at these small cap, they're starting to wake up a little bit. Is it that things are getting better, or is it that the large cap mutual funds went so far out of their way to grow this year that it's caused all of our 401ks and everything to be out of whack? And when we rebalance, we're all going to be flooding orders to large cap funds to sell off just a piece. Not a lot. We still like it. Just sell a piece to bring us back in line. And hey, we can't have that cash sit there. Put it in large or small and mid cap funds. So short lesson tonight, but I wanted to point out that number one, if you see that happening and small caps are taking off, you're probably not missing anything. It's just rebalancing. And by the way, rebalancing in the middle of the summer when volume is lower and most people aren't around. So lower volume drives bigger volatility, and it could lead you to think that you should be putting money somewhere when really it's just the shifting of money. And the second thing is, look at large cap stocks. Why on earth would you want to be running into that now when you naturally will have some profit taking, but also you will have rebalancing? It could potentially stop this entire rally in large caps, at least for the time being, and hopefully cause that pullback that leads you to say, I'd like to buy some more. I like large caps. Maybe I want to stay there. All right. Was that an interesting way of explaining that? I hope so. I hope so. If you learned something, well, maybe you'll keep watching. Best case scenario, you join us here at Jazz, transfer your Roth IRA, 401k, whatever it is. We're happy to take your business and work with you. We don't just do investing. We do retirement planning, anything that happens to hurt or help your dough. That's why we call it wealth managers, right? We want to focus on your wealth. All right, enjoy the rest of your evening. It is late here, so I'm going to do the same, and we'll see you again tomorrow. Adios.